Hey guys, welcome. I'm so excited to teach you technical analysis. I decided that instead of just doing slides this time, I actually want to show you some things on the whiteboard. So this first video is the very basics of candles. We're going to use daily candlestick charts in order to find our best place to buy a stock and best place to sell a stock. So this is how we do market timing. But in order for me to teach you how to read a chart, I gotta first teach you how to read a candlestick. So this first video is about the basic parts of a candlestick. You ready? Okay. So there are three important things that every candlestick tells us. It tells us, and we mainly use daily ones, so I'll just stick with a daily time frame. But it tells us during that time frame, where did the stock price open? Okay? And then during that time frame, where did the stock price close? And then what was the price action during that time? So for us with a daily candle, this would be like, where did the stock price open at the beginning of the market, at the open of the market? Where did the stock price close at the end of the market that day? And then during the day, where did price go? Because maybe it went above or below the market open and close, right? So it's telling us that. There's times though where I may say, I want you to look at a weekly time frame. You're still gonna see these same three parts. For the beginning of the week, where did stock price open? For the end of the week, where did stock price close? And then where was the price throughout that time of the week, right? So depending on your time frame, you still have these three parts that each candle tells you. Then each candle is made up of two parts. You have the body of the candle and then the wick. And the body of the candle is going to be the difference between the open and close. And I'll show you that in a second in pictures. The wick is going to be the little lines that come out of that body, but that's the price action. That's what the wick shows. Okay, so let me show you. So we said that every candlestick tells you two parts. Where price opens and where price closes. So I'm going to draw two lines here, and then I'll draw a little one. So one candle may have the price opening up high and then closing down low. What does that say? That says that during the day, price opened up high and then it went down lower. So price went down during that day. This would be a red candle. So this would be the body of the candle, and it would be red because price went down during the day. And if at some point during that day price actually went up or down below those areas, we'd have a wick. And so what this tells us is price opened up here, it might have gone up a little bit, but then all of a sudden in the first hour of the day, I'm just making up a story, and all of a sudden price started falling and it fell down here, but then at the end of the day, it starts rallying back up again and closes here. That's what this candle would tell us, okay? Or let's say on the other side though, that price opened down low and then closed up high. So we could have price opens here and then closes here. Well, this tells us, this is the body of the candle, the difference between the open and the close. This tells us that price went up during the day. So this would be a green candle. And at some point during the day, price might have gone above or below this area. That would be our wick. Remember, this is the price action. So let's tell a potential story of this one. So price opens here. Maybe in the beginning of the day, price started to fall a little bit, but then we had a rally middle of the day and price started to run up. And it could have ran all the way up here, but before the market closes, it pushes down a little bit to this close. That's what this candle is saying, okay? So this would be a green candle and the price goes up. Then there's some times where the difference between the open and close is not very much. They almost open and close in the same place. So for example, this one might have been, and we could still have our wick. It could be a long wick or a short wick. But what could have happened on this one, price could have opened here at this stock price, and then we had it go up. It went way up too, and we thought this was going to be a great day, but all of a sudden some news came out and it went all the way down here, And then we found out middle of the day that that news was wrong. So price comes back up and closes here. But we see that price opens and closes at about the same price. This kind of candle is called a doji candle, and they're very, very important because they're telling us that the buyers and sellers are agreeing upon a price. And we'll talk more about that in the next video, buyers and sellers and how they impact candles. But at this place, we're assuming that the banks are thinking that this is about the right price for this stock. Whenever you have the stocks open and close really close together, that means that they're agreeing that this is about the right price for the stock. But still on this one, price opened up higher than it closed, so price went down during the day, and you would have seen this as a red candle. Okay? So now you guys know that every candle has 3 parts. It tells you, well, it has 2 parts, the body of the candle, which is the rectangle, and then it has a wick. And then what do those things tell you? They tell you where price opened, closed, and the price action. This is the basics of a candle, and now in our next video, I want to talk to you about how these things come together to tell a story for that stock.